Welcome back, everyone. Well, once you graduate, drop below half-time of enrollment in school or leave school altogether, your federal student loan goes into repayment. However, if you have a direct subsidized or direct unsubsidized or federal family education loan, you have a 6-month grace period before you are required to start making regular payments. But the federal government put all of that on hold during the pandemic, but that respite is about over, and that is the focus of tonight's Money Talks. The payment pause and interest waiver on federal student loans, which more than 40 million Americans hold, has been in effect since March of 2020, all due to the pandemic. But starting in February, your minimum payments will resume and interest is going to kick back in. So what does our financial planner, Rolandis Johnson, say about this?
I would say, and me personally, this is just kind of my opinion, if you can knock out some of it without any interest, by all means do so. Because once that interest comes back, it's going to hit, and it's going to hit fast and furious, in my opinion. And so if you have, again, we go back to income wiggle room, if you have the ability to do so, knock it out.
If you were able to make payments over the last 18 months, good for you. But if you're about to be hit hard by a new minimum payment starting up again, maybe it's time to take a different approach. The Education Department said that we are in the midst of the final extension.
Refinancing is always going to be a great option. So, I think the average is 6 to 7% on student loans. If you can get a refinance down to what the rates are now, maybe 1 to 3%, man, that's going to take some years off of it right there and put some money back in your pocket. So refinancing is always a great option. And if you're not already looking into it, you're probably missing the boat on that.
Again, if you have a private student loan, well, you never even got a pause in payment or interest, and that's really been a hard thing during this pandemic.
My wife and I are battling that now. We're just like, good Lord, I think we're going to be paying student loans just as long as we're paying our mortgage. But if you have the wiggle room to do so, go ahead and knock it out while it's just principal only right now.
Here's a little bit of good news for you. If you were in default on your student loans, it takes 9 on-time consecutive payments to get that out of there. Well, that should have happened for most borrowers, so now might be the ideal time to refinance and then to get back into paying your loans down if you can, because again, you didn't have to make a payment, but it'll show as 9 on-time payments.